Before we read a single chart, a correction. In the pilot episode, I oversimplified what money flow does. Here is the accurate version. Money flow measures how far the volume-weighted price has stretched away from its own average, which means it follows price. It does not front-run it. The information that leads lives somewhere else, in the divergence between momentum and money flow. Track the gap, not the level. A member caught this, and that is exactly the standard we want around here. Now, to the table. This is the Sunday table, and this week it argues with itself. 8 rows, and most of them wear a label their own numbers push back against. In the pilot, we walk the whole method, all 5 steps. Today we go deep on 1. Step 2. Read the status as a noun and momentum as the adjective. The noun tells you what phase the market is in. The adjective tells you how that phase is going. Most reading mistakes on this table come from treating one of them as the other, trading the noun like it moves, or trusting the adjective like it names the phase. And when noun and adjective disagree, you have not found a bug. You have found the information. This is the disagreement episode. Start where it is simple. Bitcoin. Distributing. Momentum minus 0.45. Flow minus 0.36. Noun and adjective agree. A distribution phase behaving like one. Nothing to argue about, and nothing structural building. Now SPY. The noun says distributing, but momentum reads plus 0.87 and flow plus 0.71. Both positive, both leaning up. A distribution phase that keeps pressing higher. Remember, the labels are sticky by design. A label holds until the opposite zone retires it. So the split itself is the reading. Either the pressure retires the label, or the phase reasserts itself and the pressing fades. QQQ is the same sentence with softer numbers. Plus 0.62 momentum, plus 0.24 flow. One step behind SPY as usual. And Euro USD flips the pattern. The noun says recovering, the adjective disagrees. Momentum minus 0.24, flow minus 0.69. A recovery that has not been earned yet. 4 rows, 1 skill. Say the noun first, then let the numbers describe it. Now the row this episode exists for. Gold. 2 Sundays ago, it was the highest tension row on our board. Last Sunday, we called it resolved. Momentum at minus 0.74, flow at minus 1.0, both pointing down, and we said so plainly, in writing. This week, gold rallied hard. So, were we wrong? Here is the honest answer. The reading was accurate, and the market moved the other way anyway. Because a label describes a phase, not a fate. Distributing does not mean price must fall. It means the market is in a distribution phase until the opposite zone triggers. And resolution in one direction is not the end of the story. It is one chapter. If we had sold last week's reading as a prediction, this week would be an embarrassment. Because it was a reading, this week is a lesson, and we would rather show you the lesson than hide the week. Now look at what the table does with this rally. It does not panic, and it does not flip everything at once. The weekly reads recovering. The daily still wears distributing. Momentum minus 0.37, flow minus 0.9. The 4-hour reads recovering. Momentum plus 0.77, flow plus 1.06. 3 time frames, 3 different sentences about the same metal, and that is not a contradiction. That is what phase change looks like while it is happening. The fastest clock turns first, the slowest turns last, and the middle one referees. So which clock do you trust? Higher time frame is context, lower time frame is timing. That part you know. But there is a second layer here, and it connects straight back to the correction we opened with. Look at the weekly row. Momentum, minus 0.03, flat. Money flow, plus 1.04. That is the widest momentum flow gap on the board. And remember what we corrected. Neither number predicts anything on its own. The flow number follows price. What carries information is the disagreement between them. Right now, on the weekly, participation has stretched well ahead of what momentum has confirmed. Track the gap, not the level. And this is the widest gap we have. So what do we do with a board like this? We do not forecast. We set up the questions the table will answer on its own schedule. For the indices, does the pressing continue until the opposite zone retires those distributing labels? Or does the phase reassert itself and the digestion turn heavier? Either answer is information. For gold, does the 4-hour recovery reach up and turn the daily, or does the daily's distributing drag the bounce back? Again, either answer is information. Acceptance and rejection are both results. The only losing move is needing one of them to happen. Step 2 of the method, one more time. Status is the noun. It is sticky on purpose, and it names the phase. Momentum is the adjective. It moves first, and it tells you how the phase is going. When they disagree, do not rush to pick a side. Name the disagreement out loud and let the market resolve it. That is what we did with gold in public 2 weeks running, including the part where the market humbled us. Next Sunday, the table will have new arguments, and we will read them the same way. Thanks for reading with us. See you then.